So today I'm going to drop the glitch, the model itself. We are going to skip all the nitty gritties for now because we don't really need those. And we'll be directly diving into the model itself. The model is just so beautiful, it doesn't really need any sort of market conditions. Regardless if it's a trending market, if it's a consolidating market, it doesn't care. It's the best setup that you can trade without having any knowledge. So, without further ado, let's get right into the charts and learn the system that has built the cornerstone, the basis of the GTS, and my most profitable system if you guys actually want to do it. So, starting from the basics, you all know that the basis of the system or the GTS is the zone and how we trade it. So, the underlying factor or the thing that matters is here that hey, we have a zone, price goes up, doesn't test this, like it's an unmitigated zone, right? And we go up, do something, and then we come back to the 50% of this zone, and then we tap the 50% and go back up. So the most basic system would be to long over here, put your SL below the low, take your profits at the high of this zone, and if you enter at 50%, you will make 1 to 1 risk to reward. So if you're risking 100 over here, you make 100 over there. And that is the most basic setup of the glitch. Now, this is not actually the glitch. You guys have been using the terminology, the glitch, the glitch, the glitch. It's just a zone, and the underlying factor is that when we come into the 50% of the zone, we expect price to come back up at least until over here. We don't really care about going to the highs. We only care about taking out the high of the zone, and this would pretty much look the same for shorts. We have a zone, we come back up, test the 50%, tap it, go back down. And obviously the SL remains above here and over here. However, I have talked about the fact that not all zones are equal, and not all zones will give you this schematic that you enter at the 50% and target the lows or the highs, whatever. Not all zones will work like this. So, what the glitch itself is, glitch, the strategy that I trade, it's one specific type of a zone that almost always gives the reaction from the 50%. Could go lower, but 50%, and it gives a reaction from there. The reaction is almost until the high or the low, high if you're longing and low if you're shorting. So what does that specific type of zone, the glitch, looks like? Now here is an example of a simple zone. Now let me draw another leg. So we were coming something from here, right? We had this structure. We were creating lower lows, and lower highs. And then what happens is that we make a higher high, then we come back, and then we make a higher high relative to this break of structure, zone created, and then we just go higher, come back, retest, and boom. Now this is just a zone. What makes the zone a glitch? What is the glitch? We had this low, right? This is the low that's important, which wasn't violated. By violation, I mean it could go below this. The structure does this. It takes out the low first and then goes back up takes out the high. So what does this become? This is a raid on the previous low. A raid, a sweep, whatever you want to call it. It could also be a break of structure. It doesn't matter. The point is that it takes out the low first, then it goes back up and takes out the high. This now becomes the glitch. This is the glitch. The type of zone that takes liquidity from one side, goes back up, and closes on the other side. And this is what we call the glitch. This is the type of zone that almost always gives a 1-to-1 on the retest. This is the type of zone. Now, again, this, it does not take any liquidity. So this is a zone that is kind of tricky. It might give a reaction, it might not give a reaction. I don't trade these zones that haven't taken any form of liquidity. What is liquidity? Well, basically, just let's just say that there is a low, and below the low there are stop losses or liquidity. Just stick to that. So anything that it sweeps, closes, or anything, it just has to violate this low, go down, come back up, break a structure, and then test, and boom, you have a 1-to-1. And similarly, it would look like this for the shorts. Uh, Takes out the high first, raids it, comes back down, closes below this low, and then goes back up for a retest, gives you a 1-to-1. You make your money, and then you're out. Let the market go wherever it wants to. It could go down below, it could like literally just tap this and then go back up. You don't care. You got your 1-to-1 and you're good to go. Hopefully, you understand what the model is now, and I am going to give you tons and tons of examples that I have traded and how I trade them. And you will hopefully understand by the end of this video how the model works. You can literally replicate it on any time frame that you want, be it 1 minute, be it 5, 30, 50, or weekly, whatever you want. It works on all the time frames. So without further ado, let's get right back to the charts. Now, I will do a simple stuff. I won't cherry pick any trades for now. All I'm going to all I'm going to do is give you an example of how the zones you can find them, how to pick your zones. What did I say? It has to take some sort of liquidity before going back up. Right off the bat, I have a few. Let's actually shift to some lower time frames. 15 minutes is pretty good. And we'll go through some random data. Let's start from here, I believe. Yeah, this is good. So you see, we close below this, and then after some time, we close above this high, and the close comes here, not here, it actually comes here. So this becomes your bullish zone. What happens later on when the price comes back after some days, maybe one day, it taps the 50%, gives you the 1-to-1, and then it does whatever it wants. We don't really care about that. All we care is the fact that we got our 1-to-1 and it then just drops. Further, this zone. Now, if I show it to you, it's like there is a lot of liquidity below these lows. I'm not going to shift to 5 minutes because I can see that there was a previous low over here. It took the liquidity of that. So we have a new zone that we can actually trade from. Tap, price once goes up, we get a new one to one. I'm just doing it right in front of you guys, and I'm not cherry picking any trades. If I see one, I'll draw the zone so that you guys can see and understand the thought process behind my trading, and hopefully you guys can also replicate it. The zone, the glitch, does not really care about what the trend is. That's the beauty of it. If the zone, the glitch, sorry, not zone, if the glitch is present, all you need to do is place a limit, regardless of what the trend is. If it's bullish, doesn't fucking matter. If it's bearish, as you can see over here, it's been pretty bearish. It doesn't matter. All you gotta do is place your limits at the glitches and then just wait. Price will often come and give you a TP within an hour or so. Going forward, do I see any glitches over here? Nah, not this. Nope. Nope. One, two. Nope. Nope. Okay, going. This is low. Any glitch over here? So, oh, actually, yeah, there is one. See this? This is the last high, actually, from here. This is the high. Now, this is the internal structure, right? You don't have to be bothered about it. This, and there's a wick. Okay? What does the wick do? It takes out all of this low. All of this. Like, there is ton of liquidity resting below this level. It goes down and wicks through it, comes back up and closes above this level over here. Now, what do we have? We have another glitch. That is a glitch. And price then later comes over to the 50%, goes back up within one candle, gives you the TP, one to one secured, and you move on. Move on with life. And over here, you have this. So you raid the high. This is a raid on the high, right? And then what do? We close below. So this also becomes a glitch, which we lose, which we lose. And I don't want to get into why we lost it because that is unnecessary for now and we don't really need to look into it. But obviously, this could be avoided given where we were on the higher time frame, but it doesn't matter. If you don't know your market structure right, you can still take these trades. Honestly, you can take these trades. What's the most that could happen? You would lose a single win, like you would lose just a trade. And that is okay if you don't know how the market structure works. So, going forward, we have another one. One, two, nothing happens over here. This didn't really take liquidity. So, yep, nothing over here. I see one. This took liquidity. And then closed above, right? So I have another zone. And this zone, did it? Yeah, it took liquidity, right? And then it closed back above. So taps 50%, gives the TP after some time, some hours, but one to one is a one to one. It doesn't matter. And then what happens again, we obviously have a break of structure. And if you notice, this low, this low took these two lows. There is a liquidity sweep. There is a sweep. And you have another zone over here. Now the zones have become very, very big because of, I believe it's the market structure like this. But you would probably see it clearly on the 1 hour. Let's go to 1 hour. Yeah. So see, and this, then you have break of structure above. Price comes down, but does not mitigate the 50%. That is very important, guys. If you see price coming down and does not mitigate the 50%, the zone remains valid. It does not change. The zone remains valid. Now, going back to the 30 minutes, I would show you something. Yeah. So, you took this high and then we got a new trade. Now, once you see this, you would be like, hey, we took this liquidity, then we went back up. Let's actually go to the 15 minutes and see what happens. Yeah. So we went back up, we got ourselves a breakout structure, right? So why did this zone not work? Well, first things, it's not a 100% win rate strategy. That's the first thing. But this particular zone should be avoided. Why? Because if there is a first there are two things to understand here. If there is one, if it's an unmitigated glitch just below this glitch, do not take this. That's the first thing. If there's an unmitigated glitch just below your glitch, take this glitch, not this one. There are chances that this will play out, but from my rigorous backtesting and 2 years of trading the strategy, it's not worth it. It literally just has a 50-50 win rate, and the chances are that you would either lose or make. But in the long run, these zones are stupid and they are manipulative. The ones that you should take are the ones over here. If there's an unmitigated glitch below your glitch, take the one that's unmitigated. That's it. And the second thing, you have to go across time frames and develop some sort of an understanding of what the market is doing on your higher time frame. So over here you see there's a 15-minute breakout structure right above this one. But on the 30 minutes, like, you just have to shift across your time frames to understand, hey, what is the price actually doing? So it rated this and then it went back up, rated this as well. That's a raid. That's a sweep. That is not a closure on the 30 minutes. And if you go to the 1 hour, you will see that it's further annoying. There. So candles actually tell you a story. Had this been a closure above on the 30 minutes, if you're looking at 15 minutes to validate your glitch, to validate your zones, always look at a couple of time frames above it. So if it's a 15-minute zone that you're looking at, look at what the 30-minute has done, because it also gives you some sort of confirmation or a narrative. So if it's a closure in 15 minutes, and if it actually go back 15 minutes, where is it? Let's find it. So over here, you see this candle, it's like a rejection candle, right? So the wick is much bigger than the body. So you need to confirm it on a higher time frame, that whether if it was a wick or a body closure. I mean, I'm just giving you some tips right now, and you will hopefully learn that as you get more experienced in this system. So let's move forward. We have a win, we have a loss. We'll just consider it a loss, which can obviously be avoided if you shift through your time frames and make some sort of an adjustment. And yeah, so nothing over here. Boom, boom, boom. Nothing over here. I mean, it is also a zone. It is a zone. It's a glitch, in fact. But yeah, it also took liquidity as well. Go back to the 15 minutes. So what happens over here? Now, this is where the fractal nature of the system comes. If you're looking at 13 minutes, 15 minutes, there's a chance that 5 minute was swept. And over here, we swept some lows 3 times. So one low, two low, three lows were swept. So this is a glitch itself. And what happens when the price comes back here? One, two, three, four, five, six, seven, and you get a 1 to 1 again. And let's look at the 5 minute. If it's giving us anything, nothing, 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 nothing. One, two, this break, raid. That's a raid, and that's a break of structure. However, I would not suggest taking these kind of trades, because what happens over here is that we do not close below this particular low. It's also a raid. So that is just market chopping. And I don't think you should be trading on the 5 minutes until or unless you understand what is happening with the narrative of the price. You should not be taking trades on the 5 minute charts. Going forward, going forward, nothing happens, nothing glitch. It's just a zone. These are just zones which you are seeing that price is reacting from. It's not a zone to be taking a trade from. Okay, okay. And over here, same thing happens. Raid, closure, but you see, the point is we never closed below this low. So that is just a raid. And price could actually just do this. So avoid these kind of smaller zones because they are more chaotic. Avoid these kind of zones. Have a bigger structure in mind. Stick to the 30-minute time frame. When you're starting out, stick to 30-minute time frame. You will find loads and loads of trades. Trust me. You don't have to rush it. Stick to lower time frame or higher time frames. 30-minute, 1 hour. They work very, very well. So over here we have another zone. Why there's a zone? So you see there's a wick and there's a wick. And then we also took it out. So that's a raid. It's a raid on the 15 minutes, I believe. Yep. There is a high, there's a low, there is a high, there's a lower low, and after that lower low, we break above this. So that is a raid, and then it goes back up. So this becomes our zone to be taking a trade from. Let's see what happens after that. Voila. One, two, we get the glitch. And again, over here, we have this low that gets taken out, and then we shoot back up. So this becomes a zone. Now, sometimes you have to sift through it as well, because there is also this zone. Because looking at the market structure, you can see that, hey, this was a high, this was a low, this was a lower high, this was a lower low, this was the lower high that is responsible. This is the party responsible for taking out this low, rating below this, and then it goes back up. So there is a break of structure in here. So just take this as the zone and not necessarily the whole the whole of it. You have to look at the structure that took out the liquidity, and this will be your glitch. Price comes in, first step, next candle TP, you're back. Let fucking do it let it do anything. You don't really care about where it's going. You get the one to one, you move on with your life, you make money, and that's about it. Going further, I mean, obviously, you understand it now and you can practice it on your charts. And this was just an example of a single token that I don't even trade any much. And it was just Doge. But if you if you want to practice it and if you want to learn it, go and see every chart that I have given in the trades. Let's go to the crypto majors and I will show you every trade that I have taken. Every trade that I've taken was and has the same type of the glitch. Even though I target even much higher, one to one is always given. You see this zone, it took liquidity above, then closed below, and then it goes back up, and it has already given us the one to one, and you guys know that. Then we have let's look at the charts above. So this one is also a same example of why I gave this trade. We see this low, we see this high. This is a high that resulted in this low. Price goes back up above, takes out this high, comes back below, closes below this, and unfortunately we did not have an entry here, but it would have been a great glitch to enter from. Similarly, over here, we took out this high, not necessarily this high, but this internal high, and then we closed below. Closed below becomes a zone, and that is where the entry was from. And let's go further. Same example, took the low, took the high, closed below it, and this is where we were entering from. I believe we had a one to one. I think we did, and then the price obviously came below. But yeah, this was an example as well. What did I do over here? I'm getting back in the original. Oh yeah, this was an SL. This was not a glitch. This was based on the Wyckoff. But yeah, and this same thing. So this is the whole glitch that I was trying to trade from. Took this low, right, and then went back up, took this high. And I was trying to trade from this point and targeting the highs, but unfortunately I don't think that worked, and we ended up closing this break even and going back up again. Same thing, took the liquidity above, closed below, we enter, and then obviously I believe it gave the one to one. And yeah, so every zone that you see me taking trades from are the glitches. I don't trade normal zones. And here is another example. So this is what I was talking about. So this is the responsible zone that took this low. I did not take this whole point. I only took this high and this low at the zone. So this also took down this liquidity. And I think this, I don't know if we got the entry on this or not, but yeah. And same exact thing took this took this liquidity. Wait, let me see. uh yeah, on one chart, I believe this is the Binance or maybe Bluefin, I don't know, but on one chart this low was rated. So this was not a double bottom, but this was actually a sweep. This particular point, this one, yeah, it's the same over here. So this low was first rated, and then we close back up, and then it becomes a glitch, and then we take a trade from that. Uh, moving further. What was I trying to do over here? I have no idea. Oh yeah, that was, never mind. This wasn't the glitch. Same goes for here. This is a very tiny high, which I gave the trade from on Ethereum, I believe, and then we canceled it because I saw something. Um, moving further. Yeah. So this was a pretty sick trade. You guys hopefully remember it. And the whole thing was, you see the snipe over here? The whole point was, this was a bigger zone, and what we did before breaking it out was that we we had these lows, right? This candle took out all of that liquidity, went below, rated it, and then closed back up, and this is where we entered from. And in an instant, y'all were like sniping, insider, and this is where we got the one-to-one from. So all of my trades, that the charts that I've posted over here, same thing, liquidity rated, went back up, closed above, and that is where we enter from. And I believe this was ATP as well. And same thing, low rated, low rated, this one, not this one, it's not, it's unneeded. And this low was rated, and then we closed above. So the glitch was from this to this, and we got a solid one-to-one regardless. What happens? I mean, again, it's just unnecessary right now. And if we go to the alts, hype from last night. Oh, this is what Solana from last night. Same thing happened. Raid, close, get the glitch. Same thing with hype. Raid, close, and it is still running, and it's obviously running one-to-one on this one. So you understand this hopefully by now, that all of my charts that I have posted, they are all the same. They are all the glitches. Every trade that I have given, are all of them are glitches. Now this was crypto, and I'll also show you the gold charts. This was something that I posted yesterday, that these are the points that I'm looking for too long. This is a glitch. This is a glitch. This is a glitch. And I'll show it to you. This is the 15-minute chart, 30-minute chart. So this low rates, and then we go back up, close above the high. Price comes down, and then we go back up. Just a 50% retest gives a one-to-one in literally 5 minutes, or maybe 10 minutes. I don't know, but it was close to that. And every chart, every trade that I've given is a glitch. This was also a glitch, I believe. Actually, let me see. So, yeah. This wasn't a glitch. This wasn't a glitch. This was from a simple zone, but I had the confluence of a support and resistance level over here, so I went in and we got a one-to-one out of it. And it's like same thing, guys. It's a glitch. It's always just a glitch. One-to-one tap, one-to-one we got. This was from the day of FOMC, I believe. This is where I gave the 39.42 entry, and we hit the TP. and then obviously like this was a 3-hour trade from this glitch. Like this was the internal trade, that was internal zone that was used, and I was targeting the bigger zone because I can do that. But for you guys, just stick to one. And hopefully you guys understand it by now. And there is one more thing that I want to teach you guys, and which is the best type of zones that I've seen are obviously the ones that take liquidity. But you know what other zones take liquidity? There is one specific type. One, two, three, four, five. What is this? This is what we call as market structure shift. The best zone that I have seen in all my trading system. The market structure shift, when we are going up high, we rate above this, and then we close below another another zone. So the market structure shift is one of my favorites to trade. So these are the two things. Obviously, you could argue that this is also a market structure shift, but what if we were just doing this? Let me actually this this is not a market structure shift, and this is just a raid because we were obviously going higher and higher, right? We were obviously going higher and higher, and this was just a raid. But market structure shift is when we are going higher, right, from here, and then we shift it, and then we start like going lower. So market structure shifts, it's again a one to one. You guys know it, one to one short. And from in this case, when we are going higher, we see a liquidity rate and then come back to the zone, test it, because now this becomes a glitch. And this is more than likely, it's always protected. So this will be it for the system and the glitch. And I really hope that you guys understand it and particularly trade this, because this is the most easiest system strategy that you guys can actually trade from and make money without having to worry what the trend is, how the markets are behaving. Just put your limits on, mark your zones, put your limits on, and go kill it. I'll see you in the next lectures when I post them. And from here, this marks the end of the module one, because the GTS is in like three different modules. So this was the most basic one. From here, we will start in the more advanced sections like a intermediate, and we will learn the 5-star model after this. And after that, when the 5-star is completed, we will then go into the advanced, more experienced, advanced trading strategies, which will be called the super glitch. Thank you, and I really, really pray that you guys take this, backtest this, and start printing.